As a property consultant, I meet investors and first-time buyers almost every other day. And almost everyone comes to me with the same question. Where is the next best place to invest in Dubai? So now, if you have ever felt stuck between mixed options or scattered advice, stay with me. Hi, I'm Neha from Experience Realty, and in this video, I'm separating facts from opinions so you can decide with confidence and understand the key investment hotspots you should be considering in the year 2026. So coming back, it's a very common question and the answer is actually quite simple. The best area to invest is the one that aligns with your requirements and expectations. However, there are key real estate fundamentals that must be taken into consideration. Navigating those fundamentals while finding the right fit, that's what makes the difference in choosing the right investment. Some of the important factors that you need to consider. Number one, connectivity and infrastructure. Areas that are connected to major highways, metro lines, airports, and business hubs consistently outperform over the long term. Number two, demand drivers. These are things such as population growth, employment hubs, tourism statistics, and lifestyle appeal, because demand is what fuels appreciation. Number three, developer reputation and lifestyle offerings. A strong developer with a proven track record ensures delivery quality, resale value, and community experience. And number four, long-term vision of the city. See, Dubai does not grow randomly. Every district, every area is shaped by a master plan. The stronger the city's vision for the area, the stronger your returns. And alongside all of these fundamentals, your strategy matters just as much. So here, number one is timing. When you enter the market and when you exit. Entering during early phases and exiting at the right cycle can dramatically amplify your returns. Number two, holding period and leverage strategy. So if you choose to leverage, do it wisely. Take a calculated risk, not blind risk. The longer your holding period, the smoother your appreciation curve. And lastly, but most importantly, choose your developer wisely and your advisor even more wisely, because a good developer will make all the difference as they are the ones who build the community, and a good advisor helps you build your wealth. So your investment outcome depends on both. Your returns depend on how well an area meets these fundamentals. So instead of talking in abstract, let's put this on the map of Dubai and see where these fundamentals are playing out. This map is the growth story of Dubai. This is where it all started. The Sheikh Zayed Road, being one of the most central highways, is a main artery that ties together every major district from downtown to Business Bay to the Marina and JLT, as well as Jebel Ali and all the way to Abu Dhabi border. So now let's move towards a quadrant that we in Experience Academy like to call the urban heart of Dubai. This includes Old Dubai with historic areas like Deira, Nada, Oud Mehta, Gurud, Mankul, Bar Dubai. These are neighborhoods where Dubai's story actually began. The Gold Souk, where the first traders, the early businessmen who came here and set the foundation for what the city would one day become. These locations are not just districts, they are the cultural and commercial roots that shape Dubai's identity. Just a few minutes away, you find Dubai's most iconic landmark, the Burj Khalifa, and everything that surrounds it. Whether it is downtown Dubai, Business Bay, Zabil, DIFC, and the World Trade Center corridor. The urban hub of Dubai is a vertical, high-density neighborhood that defines modern city living. It is the center of global tourism, so anyone who ever visits Dubai inevitably ends up here. More importantly, it is the center of business activity. Over 300 hedge funds, 17 of the world's top 20 banks, and 5 of the top 10 insurance companies operate from here. According to the Global Financial Index, DIFC is one of the only true global financial centers in the region, placing Dubai on the world map as a financial powerhouse. And historically, This area thrived for a reason. Dubai's early success was driven by the fact that Dubai International Airport and Port Rashid both were located right here. So it created a global connectivity. And now the first community that I want to highlight in this quadrant is the Dubai Creek Harbour. It draws inspiration from the success of downtown and Dubai Marina. This brilliant project is taking shape near the Ras Al Khor Wildlife Sanctuary, where $650 million have been expended by the government to revamp the area and thereby make it a new tourism hotspot, attracting 250 to 300,000 visitors. Emaar's Dubai Creek Harbour, spanning over 7.3 square kilometers, is a fantastic master community, and the area to focus on in the coming year is the Sanctuary District. The Creek Tower, the Square Mall, and all the grand plans are in the works, but the area has already seen substantial appreciation. So if downtown Dubai is the city's heart, Dubai Creek Harbour is the future. There's been significant appreciation in properties from 1,400 to 1,500 dirhams per square foot in 2020. Prices have surged all the way up to 2,400 to 3,000 dirhams per square foot in 2025, showing over 50% appreciation in just 3-4 years. Rental income has also risen by more than 50%, from 50,000 dirhams to 110,000. So 3 times the size of downtown. The prices are expected to mirror, at the very least, the prices of downtown's 4,000 dirhams per square foot, if not to eventually surpass them. And the factors that are boosting the demand for this community include upcoming developments as well as enhanced lifestyle, improved infrastructure, investment attraction, urban planning, sustainability, economic growth, and a population influx. Dubai Creek Harbour is more than just real estate. It's a vision, a city within a city, offering a futuristic lifestyle by 2040 and beyond. With Emaar's commitment to innovation and design, this development promises a unique, unparalleled living experience in Dubai. So when it comes to family-focused waterfront apartment living, nothing else comes close in comparison. Next up, let's talk about what I like to call the liquid gold of the city when it comes to real estate. Yes, I'm talking about the new waterfront of Dubai that is taking shape right here. You have Beyond in Maritime City, who are effectively the master developer on the stretch with the largest land parcel. Then you have Emaar crafting Rashid Yachts in Marina, and Nakheel developing Dubai Islands. All of these communities will benefit immensely from their proximity to the pulsating heart of Dubai downtown and the historical economic hub. This means that one thing is for sure, that demand is literally sitting at your doorstep. Because this entire belt is waterfront, tourism will be a major demand driver as well. And to uplift this entire corridor and support these master developers, the government is rolling out transformative infrastructure projects, from key developments such as road corridors to the upcoming Gold Metro line to the Dubai Reef project and the Dubai Walks pilot initiative, which starts right here and is known as the Al Ras corridor. These are not standalone projects, they are the backbone of how this entire zone will operate and grow. Now that your belief and confidence in this area is galvanized by the scale of the government involvement, let's zoom in on Maritime City specifically. This is one of the last centrally located waterfront districts left in Dubai. Remember, Dubai has only 72 kilometers of coastline, of which just 27 kilometers is freehold. That's why in areas like these, the equation is very simple. Scarcity, that is roughly about 3%, plus demand equals to long-term value. Maritime City has direct access via Sheikh Zayed Road, making it a natural choice for families who want freehold properties close to where they already live and work. And of course, it's waterfront, always in demand and always limited. The social infrastructure is already in place. You have schools, hospitals, restaurants, beaches, parks, and all the works. Yet the community itself is still in its early phases of development. And that, for a strategic investor, is a huge advantage. Geographically, Maritime City sits in a very special position between the Dubai dry docks and Port Rashid, which is home to the world's largest enclosed cruise terminal, handling up to 14,000 passengers per day. That brings tourism, footfall, and serious economic potential straight to this coastline. On top of that, the area is fully aligned with Dubai's macro vision. It sits within the Dubai Economic Agenda D33 and the Dubai 2040 Urban Master Plan. Massive infrastructure initiatives like the Shindagha corridor, with an investment of 5.3 billion dirhams, will reduce travel time from 104 minutes to just 16 minutes, uplifting all the surrounding communities, including Maritime City. There's also one of the most exciting initiatives that is taking shape right here, the Dubai Reef project, which is set to become one of the largest ocean restoration programs globally. This mega project along the Dubai coastline will boost marine biodiversity. It will create new habitats for coral and fish and support long-term environmental sustainability. The first phase is located directly in front of Maritime City, which means that the community faces a regenerated, future-ready marine ecosystem that will enhance its appeal, its views, and its long-term value. Now, this is very important for you to understand why this is a noteworthy development. See, traditionally, the only real drawback of having waterfront living or sea view living is that at night, the horizon can feel completely dark. With the Dubai Reef in the works, bringing life, light and activation to the water, even that objection is handled beautifully. Now, add to the mix the newly announced Gold Metro line, which will start from Maritime City and connect across Dubai. This is not just about convenience, this is the future that is being proved within this urban development. Within this story, Beyond is being positioned as Dubai's leading waterfront lifestyle developer in this micro market. With over 3 million square feet secured, Omniath will continue to build new towers here, including the future Dorchester Collection projects with 500 meters of private sandy beaches exclusively for Omniath and Beyond owners. And when you look at the pricing, it's priced at just 3,000 to 3,500 dirhams per square feet. And if I compare it to the established waterfront communities like Blue Water, the entry point here makes absolute sense for investors. You are buying in one of the last central waterfront districts, backed by infrastructure, backed by tourism. It's scarce and it's blue chip developers. At this price, which still gives you room to grow, the potential is immense. Within the same northern waterfront belt, there are two more destinations I want you to pay very close attention to: Rashid Yachts and Marina and Dubai Islands. Starting with Rashid Yachts, it's positioned next to the Founder's House, the epicenter of Dubai's rich historical tapestry. It's a 25 billion dirham mega project by Emaar and is set to be one of the top waterfront destinations, attracting global tourists, cruise liner guests, and high net worth individuals. It boasts a 600-meter canal pool and is also home to the iconic Queen Elizabeth II. A complete master plan with a marina, a promenade, mall by the sea, private beach clubs, floating restaurants, boutique hotels, and potential Emaar developments which will enhance the community appeal. The first launch was priced at 1,500 dirhams per square feet, and today it transacts at 2,500 plus dirhams per square feet. That is roughly a 70% appreciation in about 3 years' time, and it's still not handed over. Current prices are starting at 2,800 dirhams per square foot and are expected to reach 5,000 dirhams very soon. Now, staying in this corridor but moving slightly further along the coastline, let's look at Dubai Island, Nakheel's next big play. With Dubai targeting a population of 8 million, this project is a key future residential and tourism hub. Developed by Nakheel, the 17 square kilometers visionary development includes 5 islands, 86 resorts and hotels, 21 kilometers of beaches, 9 marinas and 2 golf courses. It's going to be home to 38,000 residents and is going to deliver basically an upgraded version of hospitality and residential living. Dubai Islands is a long-awaited development by Nakheel, aligned with the Dubai 2040 Urban Master Plan. The 5 islands include Island A, which is going to be a service island, which is going to have social infrastructure such as schools, hospitals. Island B is going to offer 3 distinct concepts, including beach resorts, community waterfront resorts, in collaboration with renowned hospitality brands, and an island living community. Island C is a family-centric enclave featuring waterfront golf course community with an 18-hole championship golf course, luxury villas and mansions. Island D, distinguished by golf and sports country club residential district. And Island E, though the smallest, holds luxurious waterfront villas and designated yacht parking facilities. Now, waterfront communities in Dubai are prime real estate as they consistently deliver 20% higher returns than inland properties, as evidenced by places like Dubai Marina, Emaar beachfront, Palm Jumeirah, Manila Jumeirah. These areas are always in high demand and projects average between 5,000 to 7,000 dirhams per square foot. For instance, Medina Jumeirah 4,500 going up to 5,000 dirhams per square foot. Emaar beachfront 5,000 dirhams and above. Blue Water 6,800 to 8,000 dirhams. City Walk, which is not even waterfront, 4,500 dirhams per square foot. Now, given the prime features, there's every reason to believe that these developments will rank amongst Dubai's premium communities, offering exceptional returns for investors. So given the prices today and the scale of what's to come, the most conservative calculations deduce that these areas will at least reach 10,000 to 12,000 dirhams per square foot. Now moving along, let's look at the map again. Alongside Sheikh Zayed Road, there are 4 major highways that run almost parallel to it, and together they form the backbone of Dubai's connectivity and growth. You have the Al Khail Road, the E44, you have Sheikh Mohammed bin Zayed Road, E311, you have Emirates Road, E611, you have Sheikh Hamdan bin Zayed Road. Now these are intersected by 2 key verticals, the Sukhaim Street and the Hessa Street. Now traditionally, villa and townhouse communities have flourished along Hessa Street and Al Qudra Road, becoming hubs of family living. Now, while this clearly indicates a strong demand and investor appeal, over time it has led to congestion and longer commute times, especially during peak hours. So the question became, where can you create the next family hub? So the answer was the Dubai Al Ain Road. It underwent a 2 billion dirham makeover and is now a 6-lane highway that intercepts all of the major lifelines of Dubai. And basically what that means for us is that it reduces the travel time to major destinations such as downtown Dubai or the Dubai International Airport in around 20 to 25 minutes. Identifying this opportunity, major developers started to spring up in the area with new master communities. You have Aldar with Haven and Athlon, you have Miras with the Acres, you have Dubai Properties, launching again Villanova. But my favorite is the Valley. It's a one-of-a-kind family-focused community by Emaar. It consists of townhouses and villas with beautiful design language that incorporates green spaces, water bodies, family-centric amenities, each thoughtfully designed to enhance the residents' life experience. So now, although the early clusters have just started handovers, which by no surprise have been fully absorbed, investors have made around 150% returns. And still, if you ask me if this area still holds potential, my answer is 100% absolutely yes. Because today, something around 1,600 dirhams per square foot, when I compare, there's nothing of this pedigree out there. The valley stands out and it's still highly undervalued because the community has not even fully taken shape. So given its offering, it has every potential to reach, if not surpass, the established townhouse and villa communities in the coming years, reaching the price point of 3,000 dirhams per square foot. Now I know that's a hard pill to digest, but numbers don't lie and time will tell. Now, growing with the city's orientation from north to south, we now arrive at what many consider the upcoming future of Dubai. A lot of the most significant new developments are taking shape in the south of the city. And they're not happening randomly. They are all clustered in one powerful corridor. This region features prominently in the Dubai's economic agenda in Vision 2040, but beyond that, the underlying fundamentals here are exceptionally strong. Let me explain. The success of this belt is rooted in history. Old Dubai flourished because of its proximity to the Dubai International Airport, Port Rashid, and now history is about to repeat itself, only this time on a much bigger, grander scale. You have the largest airport in the world, Al Maktoum International Airport, DWC, which once fully operational is expected to handle 220 million passengers annually and 16 million tons of cargo. Also, you have Port Jebel, the region's largest, most strategic port. So the airport-port combination creates unmatched logistics. But it doesn't stop there. The new Etihad rail line will pass straight through this region, giving Dubai South direct rail connectivity across UAE. Now combine all of this with the government's long-term vision, you'll understand why global interest is pouring in. So alongside this multimodal corridor, you have the free zones, you have multiple economic hubs that are coming into place. So this ecosystem altogether is projected to generate around 500,000 jobs and contribute to 35% of Dubai's GDP, translating to a future population of nearly 1.5 million residents in the area. And naturally, the biggest developers in UAE have already moved in. My picks in this entire belt are very clear. We have Expo, we have Emaar South, the Heights, Grand Polo, the Oasis. All of them belong to the same southern thesis. Now, Emaar with its 4 flagship lifestyle communities, Expo City Dubai, the urban nucleus of the south, and saving the best for the last, Nakheel, the name behind Dubai's most iconic waterfront transformations. We'll start with a favorite of mine, Expo City Dubai. Born from the legacy of Expo 2020, Expo City Dubai is strategically located on Al Wasl Avenue in Dubai South, right at the crossroads of Sheikh Mohammed bin Zayed Road and Expo Road, with direct access to Sheikh Zayed Road and Al Khail Road within just 5 minutes. From an investment standpoint, Expo City is one of the strongest apartment plays in the city. It's an urban center with one of the lowest planned densities spread across 3.5 square kilometers with only around 10,000 apartments planned. That's incredibly low for a city-scale master community. What really sets it apart is that Expo City is fully backed by the government and designed as the blueprint for a 20-minute city, a place where everything you need is within a 15 to 20-minute radius. Unlike other emerging communities where you wait for years for infrastructure, Expo City's foundations are already in place. The Red Line metro station is operational and directly connected. The new Dubai Exhibition Center will be fully operational from 2026, hosting major global and premier events. Emaar's Expo City Mall is coming up here, the 4th Emaar-operated mall in the region, adding a powerful retail and lifestyle anchor. And on the commercial side, you have LEED Gold and LEED Platinum certified office spaces attracting serious corporates. Fortune 500 level companies such as DP World, Siemens, Terminus Group have already chosen Expo City as a base, signaling long-term confidence in this location. So in a nutshell, if you can enter a community like this at the price point of 2,000 to 2,100 dirhams per square foot, the upside is substantial. Today, Dubai Hills Estate, with no metro inside the community, no exhibition center, and without the same scale of commercial infrastructure as Expo City, is already transacting at 3,000 dirhams per square foot. So over the next 3 to 4 years, as Expo City gains momentum with the mall, the exhibition center, and more multinational office occupiers, a baseline price of 3,000 dirhams per square foot is a very realistic expectation. And that too is assuming that the market has halted for the next 3-4 years. And the upside, if the market continues on the same trajectory, is going to be something else entirely. You want apartments with real long-term upside, existing infrastructure, and government backing? Expo City Dubai is not just a good choice, it's one of the smartest entries you can make today at 2,000-2,100 dirhams per square foot. Emaar South is another fantastic development, building premium villas, townhouses and apartments centered around an 18-hole championship golf course in the heart of this future corridor, which is basically following in the footsteps of Emaar's most celebrated community, Dubai Hills Estate. 3-bedroom townhouses launched at 999,999 today transact at 2.4 million dirhams. Let that sink in. And the community is as yet not done. So there's immense growing potential in a fantastic organized master community where price points are still like entering at penny stocks. Another one here is the Heights Country Club and Wellness, a new master plan community, and because it's about to be launched, it presents a rare opportunity to enter at the beginning of the cycle where pricing is most attractive and the upside potential is usually the highest. But let's talk about what's already been launched and still offers great promise. I'm talking about the Grand Polo Club and Resort, the latest addition to Emaar's portfolio of iconic master communities and one of the most unique villa concepts coming to the market. It's strategically located with direct access to Emirates Road and Expo Road. It connects effortlessly to all the major highways, placing it right in the growth belt of Dubai South. You are looking at a community with an overall development value of around 41 billion. There are very few developers who have the financial muscle and operational capability to execute a project at this scale. The only two developers I can think of are Emaar and Nakheel, who both already have their hands full with major master plans, and because of this, competition over the next few years is extremely limited. You're not going to see 5 other Grand Polo type projects popping up and diluting value. And on top of that, Emaar has made a very deliberate choice. No apartment blocks inside the master community, only villas and townhouses on limited freehold land. Often, to maximize profits, developers insert mid-rise or high-rise apartments into villa communities. Here, Emaar has done the opposite. They have kept it opulent, low density, and true to the equestrian and wellness lifestyle that is the concept that this community is being built around. So if you look at it, the 5.66 square kilometer master plan, 1.44 square kilometers is dedicated to open spaces and parks. That's over 28% of the entire community reserved for greenery and leisure. That alone tells you the intent. This is designed as an elevated lifestyle community centered around polo, wellness, outdoor living and space. So in total, you have 6,661 villas and townhouses catering to approximately 26,000 residents. Do the math. You're looking at a density of roughly 38 people per hectare, which is very healthy for Dubai, especially for a lifestyle-focused villa community. Lower density translates directly into more privacy, more space, and stronger long-term value. Add to this is the proximity to Dubai's operational international airport and the wider Dubai South ecosystem. You can see why this location is poised to flourish. It sits right in the path of the future demand, yet offers living experience that is intentionally exclusive. Now let's talk numbers. You are buying these villas at around 2,100 dirhams per square foot. And to put that into perspective, townhouses in Springs, a 20-year-old established community, are now transacting at 5 million dirhams. You're entering at ultra-premium, low-density, concept-driven master plan at 2,100 dirhams per square foot with an 80-20 payment plan. When you work out the numbers on equity invested versus the projected value on completion, you are realistically looking at a potential ROI north of 75 to 80% over the cycle, assuming normal market conditions. So this is only the beginning. The upcoming villa launches in this community are expected to be in the 2,100, 2,200 price per square foot bracket, which still leaves significant room for growth when you compare it to established villa belts in the city and the broader trend of rising prices in prime and lifestyle-led communities. So in short, the Grand Polo Club and Resort is a rare all-villa master plan, strong location fundamentals, low density, high livability and entry prices that are still in the early adopter band. Now, if we move from emerging lifestyle villas into ultra-luxury concept-led space, another standout in this segment is the Oasis by Emaar, a unique ultra-luxury concept-driven community. And I've already covered it in detail in a separate video, which I'll link so you can explore the full investment and lifestyle story there. And if we now take this concept to an absolute pinnacle of waterfront living, long-term wealth creation, we arrive at Palm Jebel Ali. For anyone who believes that concept-led, low-supply villa communities are the future value creation in Dubai, this is a project that deserves very serious attention. Because when it comes to vision and potential for lasting wealth, hardly any development can rival Palm Jebel Ali. Palm Jebel Ali is twice the size of Palm Jumeirah, spanning 13.4 square kilometers with 16 fronts and 90 kilometers of beachfront. The master plan includes roughly 2,200 villas with starting prices at about 26 million dirhams. That's under 2,800 dirhams per square foot. Now, to put that in perspective, Palm Jumeirah villas originally launched at around 8 million, but today are transacting anywhere between 60 million to over 200 million. Palm Jumeirah has already demonstrated what is possible. With early investors seeing up to 900% appreciation, Palm Jebel Ali basically carries the same DNA. But everything about it has been elevated. The fronts on Palm Jebel Ali are wider. The plots are larger. Water circulation has significantly improved. There are multiple entry and exit points, and the overall density is lower. Not to mention the fact that it is innovation baked into the master plan. Sustainability isn't an afterthought, but it's integrated into every layer of the design. In simple terms, Palm Jebel Ali is Palm Jumeirah refined, expanded, and future-ready. Entering a concept of this scale at around 2,800 dirhams per square foot is an opportunity that you just simply cannot mix. Three things really matter: low density, efficient layouts, and high quality amenities. And Palm Jebel Ali excels on all three fronts. From a density perspective, Palm Jebel Ali is designed for around 26 residents per hectare compared to the 44 residents per hectare on Palm Jumeirah, making Palm Jumeirah roughly 40% more dense. The floor-to-area ratio tells the same story, 0.8 on Palm Jebel Ali versus the 1.2 on Palm Jumeirah. That translates into more space, more privacy, more greenery, more air, more light, and ultimately more exclusivity for residents. The fronts themselves have been upgraded. Starting widths are of 100 meters. Compare this to the 30 meters on Palm Jumeirah. Maximum widths go up to 400 meters versus the 250 meters. Front lengths have been extended to 2.4 kilometers versus the 2 kilometers in Palm Jumeirah, and the distance between the fronts and the breakwater more than doubled, improving views and water flow. On the amenities side, a 550-meter wide central spine allows for incredible concentration of wellness retreats, parks, retail, and marina access, all stitched into a cohesive lifestyle experience. Residents benefit from Blue Flag certified beaches, autonomous mobility solutions, biophilic design principles, and even 3D printed coral reefs that support marine life and enhance the coastal environments. So every design decision, from land planning to circulation to amenity distribution, has been made to elevate the living experience beyond what Palm Jumeirah ever offered. And the potential now, you ask? Well, it's boundless. So when we put it all together, what does 2026 really look like for a serious investor in Dubai? You have Dubai Creek Harbour anchoring the urban heart of the city, a future downtown on the water. You have the new northern waterfront belt with Rashid Yachts Marina, Dubai Maritime City, and Dubai Islands, where scarcity, infrastructure, tourism all intersect. You have the valley and the new villa belts redefining family living along the Dubai Ain Road. You have Expo City Dubai, Emaar South, the Heights, the Grand Polo Club and Resort, the Oasis in Palm Jebel Ali, shaping what we can confidently call Dubai's next era of growth in the south. These are different communities, different price points, and different strategies. But the fundamentals are the same: strong connectivity, clear demand drivers, and credible developers, all align with Dubai's long-term vision. So if you focus on those fundamentals and pair them with the right entry timing, a clear holding strategy, and the right leverage, you're no longer buying a property. You're building a portfolio that can grow with the city. So now, if you're someone who doesn't want to look back in 5 to 10 years and say, I saw it coming, but I didn't really act at the time, then this is your moment to move from information to intention. I tried to pack in as much as I could in this video, but there's still lots more to discuss. Whether it's cash flow, whether it's capital appreciation, or whether it's a future home for you and your family, my team and I are here to guide you. I'm Neha from Experience Realty, and if you found this breakdown useful, please do like, share, and subscribe. If you're serious about positioning yourself for Dubai's next chapter, reach out, because now is the time to make your next move a strategic one and not a speculative one.